This week in the cannabis market, what could probably pass as a Netflix original drama, Aphria took a massive tumble after allegations from two prominent short sellers stating they found shady corporate insider activity regarding their acquisitions of foreign assets in Latin America. Who they are: Gabriel Grego of Quintessential Capital Management and Nate Anderson of Hindenburg Research. They are investors who specialize in misconduct and short selling. From their track record, these guys mean business. Grego gained a ton of influence and traction after his recent short sell of a Greek jeweler known as Foley. These guys, as Grego found, were overstating their business figures in the Asia market. After proving to be true, the company lost nearly 80% of its value, has halted trading, and the management team is under criminal investigations that are still undergoing. They presented their research in an investment conference in New York in which Grego referred to Aphria as a black hole for shareholder money. Grego and Anderson traveled to Argentina and Jamaica and sent representatives to Colombia to conduct on-the-ground research. They found that the addresses and properties of the foreign assets they acquired have little in common with the images conjured up in the press company releases. They refer to the assets as dilapidated, claiming a substantial discrepancy in quality from real life compared to those in the corporate filings. And therefore they believe there are red flags in the acquisition price that they paid for these assets. The assets in particular are the Jamaica-based Marigold, the Argentinian pharmaceutical company called ABP, and the Colombian producer Colcana. They paid a total of $700 million for these. If they did in fact overpay for these assets, where did the money go? Well, they have pointed out a paper trail of corporate entities involved in the assets exchanges that have ties to individuals involved in Aphria. In particular, two individuals in Andy DiFrancesco, an advisor for Aphria, and Mr. Neufeld, Aphria's CEO and chairman. Let's take a look. As I said, you have Aphria with Mr. Neufeld and DiFrancesco, who is an advisor and an investor. Aphria purchased these foreign assets from Syntheon Biosciences, in which Mr. Neufeld was recently chairman of, but stepped down. Syntheon Biosciences recently also acquired these assets from three privately held Canadian firms for less than a third of what they sold them for Aphria. Syntheon changed its name to Sol Global Investments, in which Aphria owns shares of, and in which DiFrancesco also has ties to. In fact, according to Bloomberg, he is their chief investment officer. What's interesting about the privately held firms that were involved with these dealings is that prior to Syntheon selling these to Aphria, they were involved with a private equity firm called DeValco, one that, according to the Globe and Mail, and I quote, days before Syntheon announced signed letters of intent to acquire the assets in March and April, the names of these three corporate entities were changed to scrub any mention of DeValco from them. DeValco is the brand name of a Florida-based private equity firm founded by none other than Andy DiFrancesco. Though these are true, there is still no proof that DiFrancesco, Neufeld, or any other insiders pocketed from these various entity transactions at the expense of Aphria shareholders. It is all up to this point speculation and conjecture, and it is also unknown as to whether the quality of these assets are well below the value that Aphria paid for them. Aphria has come out to deny unequivocally and has said that in the coming days and weeks they will provide evidence to put this to bed. They have hired a special investigation team. It should also be noted, something similar happened to the Kronos Group in the summer with Citron Research, when they said that there was questionable accounting practices undergoing. The stock for them took a tumble, but has since recovered and the claims have been put to bay. So where does one go from here? Well, if you are a market follower, it would be a nice time to go grab some popcorn and see how this all unravels. As an investor though, it depends on where you predict this will go. You should note that short sellers have a vested interest in being persuasive and having you believe them, because they will make money if the stock continues to go down. So if you're siding with them, it may be prudent for you to buy puts or short along with them. However, if you're on the side with Aphria, there's never a better time to buy their shares. As they teeter around the $4 price range, it is a substantial discount, relatively speaking, compared to where it has been. And if you don't know exactly how to go about it, a straddle position, mixing calls and puts, to speculate off the volatility may be your best bet. The Elevate Group provides media, content, and research in a number of subjects in life. Feel free to check out our other content. Thank you for listening. Have a nice day.